As exciting as purchasing your first property is, the process can be very daunting, particularly the deposit amount you require, what incentives that there are out there. Do you need a deposit at all? Do you know about mortgage insurance and what that means? Do you need mortgage insurance at all? Can you use a guarantor? What does that even mean? I'm joined today with our youngest strategic broker, our youngest mortgage broker in the team. His name's Darrien. He has the famous surname Chuy as myself. This is my younger brother. He's my first home buyer specialist, so we're gonna do a bit of a run about what it takes to get your first property. Darrien, maybe start with traditional lending. What does traditional lending mean? What do the banks want to see?
Yeah, so traditional lending, I guess, basically in the conventional way, most people know about the 80-20 rule. The 80-20 rule is where traditionally you need to come up with 20% of the deposit and then you borrow the rest, which is about 80% against the security of the property.
What happens if you don't have a 20% deposit?
Well, typically, if you don't have a 20% deposit, you need to pay something called lender's mortgage insurance.
Lender's mortgage insurance, people get confused with what that actually means. They think they're buying insurance for themselves. What that is insurance for the bank, so that no matter what happens, the bank will get their money back. The bank always wins. All right, guys? The reason why they request a 20% deposit is because the bank holds enough security there that if the property prices fluctuate up and down, especially if you're buying a good property, the bank can sell your property tomorrow and get their money back no matter what. Because technically the bank owns the property. They're giving you a loan and you got to pay off that loan in order to get your property back, right? Let's look at scenario one. Typically 20%, borrowing 80%, okay? So in the traditional method, if you were going to put a 20% deposit down, in Sydney at the moment, the average or median house price is approximately 1.6 million, which is absurd. So how much would a 20% deposit be at 1.6 million, Darrien?
That's about 320,000. Quite a substantial amount, as you can tell.
On top of the 20% deposit, people forget you've got to pay stamp duty, right?
That's exactly right, yeah. It's something people don't usually factor in their calculations.
So if we put 1.6 million in, stamp duty is typically about 5%. That's way of quickly estimating without having to go on the government websites. But let's call it 5% of 1.6 million, that's another 80,000. So we're at $400,000 to get into an average home in Sydney. It's crazy, right? Scenario two, obviously with lender's mortgage insurance, how much is the minimum deposit that you need to put in order to buy a property using lender's mortgage insurance?
It's typically 5 to 10%, depending on what sort of property you're looking to buy, whether it's an owner-occupied or an investment.
There are lenders that will go above 95% borrowing, but typically the interest rates are substantially higher. So it is, I guess, a game of finance where you've got to work out, how much is it worth to get into this property versus what the repayments will look like? Can you really afford it? But that's where a good broker comes in. And do revert to other videos that talks about who's in your A team and tips of the step-by-step process of buying your first property. Say you don't actually have a deposit saved and you're having a really hard time building the deposit, but you're paying rent every week and you can afford it because the rent is the same as what the mortgage repayments would be or similar to it if you cut out a few things, right? Darrien, is there any other way to get in?
Yeah, there is. There's something called a parental guarantee that not many people out there actually know about. And it's something that you can actually leverage and use to your advantage to get into your first property.
With the property prices soaring all across the country, the bank of mum and dad with inflation up is quite a difficult thing as well. So what a lot of parents are doing to help their kids get in is they're giving a parental guarantee. In some cases, even siblings, grandparents. Basically what happens with a guarantee is that the person who is giving the guarantee, they will give their property as security. And that security have what we call a limited guarantee, which will secure 20% of the actual property that you're buying. And then that they will allow you to borrow up to 100% plus costs on the property that you're purchasing. Let's go back to the median house price in Sydney of 1.6 million, right? So what would happen in that scenario is that you'd have the bank securing against the property that you bought for 1.6 million at 80% of that. And then the bank will take a limited guarantee to secure the remainder of the loan against the parent or the guarantor's property. So typically what that might look like at a 1.6 million purchase price is they want to guarantee the 320,000. Assume you paid stamp duty out of your own pocket. So they'll need security adequate to cover the gap of that 20%. If you are borrowing 100% of the purchase price, you could borrow up to 100% plus costs, which includes stamp duty, but that would increase the limit guarantee on the person who was given the guarantee. So a lot of people don't know about this, and it's really important to talk to a good broker because every bank has a different policy in relation to this. Some banks allow only your parents and only on the first property. Some banks allow you to do this on your second, third, fourth, or fifth property. And some banks allow you to do this with your brothers, your sisters, your grandparents, whereas other banks are only purely parents. Yes, very important if you do want to go down this route to talk to a good broker who understands the different banks, their policies, Also, the process with doing these guarantees, including what they call second registered mortgages. That's where one bank takes a guarantee to another bank. If you get this process wrong, I've seen a lot of people fail around the timeframes that this needs to be completed in and potentially lose a deposit. So very, very important that you do talk to a very experienced broker when it comes to guarantees, and the guarantor really understands what they're in for. So Darrien, tell me, if somebody did go down this path of the parental or sibling guarantee, how do they release it?
So there are two ways. As always, the bank always likes to have about 80% against the property, and you need to come up typically with the gap or have the difference there. The first way usually is either paying down your mortgage back until it hits the 80%, because if you're borrowing over the 80%, then you need to bring it down to 80%, and then therefore you can release the guarantee. Or the other way is when there's capital growth in your property, and that is another way when you request a new valuation and that takes it to 80%. So those are the two main ways of releasing the parental guarantee.
I've had a deal done for a very close friend of mine. This is probably a very unique scenario where he was purchasing an investment property and we got it really below market. In this case, it was a combination of both. We took a principal and interest loan to allow the loan to amortize a period of time, and the property was bought under market, and then the market kept growing. So that value of the property stretched beyond what the guarantor was, and all it took was a one-page form sent to the bank with the valuation and having the loan at a lower limit, and we were able to release that guarantee. So it's a very fast process once you've got that 20% equity in the properties. Very simple numbers. You have $1 million property, you need the loan to be 800,000. So you have that 80% ratio in order to release the guarantee. So let's take it back a notch, and obviously we've talked about traditional deposits, we talked about mortgage insurance, we talked about guarantees. There's other ways of getting in as first home buyers also. There's lots of different schemes available at the moment. The government's always coming up with new things, but we might just talk about this at a very high level. Darrien, tell me what's out there.
There's actually quite a lot, as you were saying. I guess the one that people most often know would be the first home guarantee scheme and the first home buyer assistance scheme. With the first home guarantee scheme, it allows you to put a minimum of 5% deposit into an owner-occupied purchase. This is a national scheme that allows you to get into your property, but there's also a maximum purchase price, and that is filtered by state.
Yeah, so without getting into too much detail, I think the idea is there are a lot of different schemes available, and a lot of them involve potentially 5%. No mortgage insurance needed to be paid. In some states, stamp duty is waived on the first purchase. In other states, it's not. I know Adelaide just came out with a huge new scheme recently, so it's something to look into if you don't know about it, especially if you are based in Adelaide. But yeah, every state will have a different scheme or grant at any particular time is kind of what we're getting at. You should speak to somebody who's a professional, who's across it, and that will usually be spread across your conveyancer solicitor as well as your mortgage broker who's doing the finance for it. The two parties need to really work together and understand exactly what it is that you're applying for, whether you're eligible for the scheme. There are sometimes income limitations. There are sometimes, you might have bought a property with an ex-girlfriend, ex-boyfriend, whatever it was, you didn't know about, so you're not valid for a scheme. You really got to be thorough with it because you don't want to kick you back in the butt 2 years, 3 years down the track when you have to pay these hefty fines because you didn't know what you were in for.
Outside of all this, are there any unique products that may suit certain individuals based on their professions or what they do?
Yeah, so funny enough, we've got one that's just come out. There's a policy, but it's very dependent on postcode. So they call them Cat 1 postcodes. Unfortunately, in Sydney, it's pretty much northern beaches, eastern suburbs. That's it. It's where all the wealthy people are. but then there's a policy called the 95% no mortgage insurance. It's been going around the forums. Everyone knows about it. Has anyone done one? We've actually done two. So we actually thoroughly understand it. It's basically you can borrow up to 95% at a slightly higher rate of interest, but there's no mortgage insurance on it. And there is one bank in the country doing that. There's a minimum loan on that one of 2 million, funny enough. So, you've got to be doing quite well to be able to get into the market in those areas, in a house, and be able to borrow 95% of that. If you are in a medical professional, you are a lawyer, accounting, as far as even nurses with some lenders nowadays, there's things like 90 or 95% schemes with them, different lenders as well, which will allow you to get into a property without mortgage insurance. And there's other schemes, for professionals that people don't realize that fit in those categories. So it's always worth asking the broker to see if they can find, anything that's going to suit your needs. If you went to your one bank, well, they're not going to know about what other bank schemes or what kind of special policies they have for special industries. So it's really important, to talk to the right people. Hopefully a strategic broker because they know what they're doing and get the right advice to help you down your path of buying that first property.